Hello and welcome to another episode of the program. We start off with business news where the Central Bank of Nigeria, CBN, has reaffirmed its use of the loan deposit ratio as a crucial tool in managing Nigeria's inflationary pressures, expressing confidence that this strategy will effectively mitigate headline inflation despite challenges in the agricultural supply chain. Reducing the LDR of banks from 65% to 50%, the CBN aims to foster economic stability, emphasizing the importance of channeling funds into the real sector to stimulate growth. The CBN's acting director in banking supervision, Adetono Adedeji, while explaining the rationale behind this policy adjustment, emphasized the significance of the LDR in evaluating banks' lending capacity, risk management, and financial system stability. He says the CBN is trying to combat inflation in different ways to give the economy a turnaround. The House of Representatives has ordered the Nigerian Electricity Regulatory Commission to suspend the operation of the recently announced tariff increase and called for the suspension of other conditions in the newly issued review of the multi-year tariff order. It has also resolved to authorize the consultant to work with the special committee to draft a bill to provide for administrative procedures that entrench proper consultation and legislative review of process for tariff setting in the electricity and other public services in Nigeria. These resolutions follow the adoption of a motion of urgent importance moved by the senator representing Ebonyi State, Nkem Kama of the Labour Party. Kama says the legislative motion on increase in electricity tariffs seeks to address key issues surrounding the sudden hike in electricity prices in Nigeria.
This motion proposes resolution to suspend the tariff increases, establish a special committee for hearings involving relevant stakeholders, appoint a technical consultant to assess the legality and reasonableness of next procedures, and draft a bill to improve regulatory process in tariff setting. Overall, this motion underscored the importance of legislative action to address the challenges facing the electricity sector and ensure fair treatment of consumers while promoting transparency and accountability in regulatory decision making.
Now, the House has set up a special committee made up of the Committees on Power, Commerce, Delegated Legislation and National Planning to organize a well-structured hearing on the price regulation of the Nigerian electricity supply industry. It's time for a short break. We'll return with company news.
Corruption not in my country.
Now, yeah?
Yes, Oga.
Okay.
Where I go come find 300 naira change?
I better try look for change now. When they do business? Hey, Timmy. I did, bro. I be. I beg, give me 200 naira. Make I take sort out this guy. If let's say no get change.
Take it, give us.
I said 200.
Give her 100 naira.
Yeah.
Okay, I agree to pay 200.
How much you think they carry people from that place we carry on the chair?
Oga.
Why they touch me?
Now 100 naira. He agreed to pay.
Because that was what you said was the fair. Why you not go pay you? Why you they extort your customer? You see this corruption, what would they hear for news? They see for people everywhere. Now be this so. This is corruption, not in our country.
Corruption not in my country.
Stop corruption now.
Welcome back. EcoBank Group has posted profit before tax of $581 million for the year ended December 31, 2023. The Pan-African Financial Services Group released its audited 2023 year-end results on the Nigerian exchange, reflecting the resilience of EcoBank's diversified business model, efficiency and stability. The group revenue grew by 11% to $2.064 billion as against $1.862 billion in the corresponding period of 2022. Profit before tax for the period rose by 8% from $540 million in 2022 to $581 million in the year under review, while earnings per share as at December 31, 2023 stood at $1.17. Now, net interest income for 2023 was $1.169 billion, increasing by 15%, and the net interest margin was 5.4% compared with a net interest income of $1.014 million. The Nigeria Deposit Insurance Corporation has increased the maximum deposit insurance coverage levels across various banking sectors from 500,000 naira to 5 million naira with immediate effect. The managing director of NDIC, Bello Hassan, made the disclosure in Abuja at a press conference. He says the increase of the maximum deposit insurance coverage for primary mortgage banks from 500,000 naira to 2 million naira would provide full coverage of 99.99% of the total number of depositors and would increase the value of deposits covered by deposit insurance to 43.10% of the total value deposits from the current cover of 40.660%. Similarly, the corporation has also increased subscribers of mobile money operators' maximum pass-through deposit insurance coverage from 500,000 naira to 5 million naira per subscriber. We'll take another break, and when we return, CBN stops OPay, MoneyPoint, and 2 other fintech companies from onboarding new customers. We'll have an expert's view on this. Stay with us, don't go away.
In the last 3 years, we have built a multi-purpose center, which is the envy of all in our constituency. And I can tell you that the people who are living there are already enjoying it.
Guy, do you think what this man just said is true? See, I seriously doubt. I'm sure it's one of those their silly lies.
And wait, do you know there's a way to find out if these things he's saying is true or not? This is the Construct app. It gives people like us a sure way to track implementation of constituency projects. It gives valid and verified information on location of projects, amounts allocated, amount funded, the level of job done, and even the profiles of concerned legislators. You and I can post directly on this app.
Are you serious?
This is the Go-To app if you want to know how our Commonwealth is being expanded by the government.
Wow. Let's even see if what this man said is true. Show me.
The Construct app is developed by Other Paper Nigeria with support from USAID and is available on both Google Play Store and Apple Store.
And it's true.
Of course, I told you.
Welcome back again. Now, the Central Bank of Nigeria, CBN, has reportedly directed MoneyPoint, OPay, Kuda Bank and PalmPay to restrict new account openings as part of the government's unwavering fight against fraud. This follows the recent freezing of 1,146 bank accounts belonging to individuals and businesses linked to unauthorized forex transactions to prevent further illegal activity. The CBN also cited the need to preserve the funds in the identified bank accounts pending the conclusion of investigation and possible prosecution. This directive to the 4 fintech companies has since generated fear in customers who worry about the safety of their funds. Well, a former deputy director / head banking services division at the CBN, Margaret Ogundana, who is also a principal consultant at Amargo International Resources Limited, is here to provide more insights into the CBN's moves. Thank you for your time, madam. Now, fintech companies have faced increased regulatory scrutiny over their account opening processes. And what are your thoughts on insinuations that the CBN is simply witch hunting these fintech companies in Nigeria?
Wonderful question. I'm sorry, I disagree with you on that. Central Bank of Nigeria will not witch hunt anybody, any institution in the financial sector. You know, the role of central bank is to promote and groom the financial sector. And look at the capacity of Nigeria. And let's look at the background issues. Why did they allow the fintechs to operate in the first instance? It was part of the financial inclusion program, and also to enable those of them who didn't have accounts in the banks to be banked, not unbanked, especially those of them in the invisible trade sector, where they operate largely using cash, transfers and cash for transactions. So it was a good idea. And if you recall, those fintechs came on board during the COVID season. So they have enabled the banking industry to expand its focus, because all those fintechs, they all have accounts with the banks. If you transfer money to MoneyPoint or do a transaction to pay or whichever, or Kuda, all of them have bank accounts with these major banks. And by bringing them on board, it has enabled, one, the financial industry to expand its focus. But now the challenge, it has to do with the Naira, the value of the Naira. So central bank is not witch hunting. I think they're just trying to sanitize the industry. And sanitizing the industry means it has to be wholesome. It has to be all-encompassing. So I'm not surprised that the fintechs have been asked to halt registration of new customers. I think that is what I want to say on that. I think it's a good idea, really, because at the end of the day, those fintechs have not only added value to the financial services in the Nigerian industry with respect to banking, they've also helped to curb the issue with respect to so much money flowing outside the banking system, which is not recorded in the mainstream banking. So now with the fintechs, everybody have a pay account, everybody have money points, everybody put down what have you. And because their KYC is not as rigid, it's not as no administrative rigmarole. All you need is to have your mobile number, and then you have an account in any of those banks, and they bring you on as a customer. So it's very easy for everybody to operate using those fintechs. So I don't think they're being witch hunted, but I think they are trying to sanitize the industry so as to enable the Naira to have its own rightful place and value going forward. Thank you.
And the instruction by the CBN to fintech companies to halt operations temporarily has generated fear in their customers who worry about the safety of their funds. Now, as a financial expert, what are the risks associated with patronizing these fintech companies in the country?
I don't think there's a lot of risk involved, if you ask me. But, there's a limit to their operations. There are some terms of references beyond which they cannot go. They are not banks. They are just online fintechs that provide us with online services, and they make things a lot easier for us. So I don't think we customers of those fintechs should exercise any fear. There's not so much risk because there's a limit to which they can go. But if you look at what is going on nowadays, in addition to the central bank wanting to sanitize the industry, and by extension, including anybody in the financial services industry, including these fintechs, there has been rumor that a lot of them are being used for money laundering. There's rumor that a lot of them are just rent seeking. If you have an OPay account or Kuda or whatever, if you want to take a loan, there's a limit to which you can. So customers don't need to exercise any fear. Once you have a central bank coming on board, that means there must be sanitization. And if you look at the value of our domestic currency, the Naira, its purchasing power parity has been very low. What I mean by that is that the value of the Naira against its major trading currencies, especially those international ones, they have not been very exciting. And you know that we have a very big economy. So if central bank now comes out to say, look, we want to look at whatever loopholes or leakages we have, we want to ensure that there's nothing that will that bring the Naira down anymore. They will look at the loopholes and block it. They will look at leakages and block it. So if it is true that these rumors we had that some of them are being used for money laundering or rent seeking somewhere along the line, I know central bank is now coming on board to sanitize, not to discourage, to sanitize, not to create undue distractions. But, they want to probably bring them on board. And at the end of the day, I'm sure those fintechs will be more strengthened than what we have now. And also going by what is going on in the Nigerian industry, the government is trying to attract foreign investments. So it must put its house in order. It must try and stabilize the Naira, because the Naira is the symbol and the focus of our economy, and is the currency through which all transactions that has to do with this nation must be used. So that is why I believe central bank simply wants to sanitize. They won't scare anybody, and they won't scare any customer. So I think we should rest our case on the fact that at the end of the day, with that sanitization coming on, I think everybody will be the best for it, because Nigeria is such a big economy. Even the banks don't have branches everywhere. But you see Kuda, all those fintechs, they're all over the place, which I think is a very delightful thing that they are aboard. And I think people should not be scared, but just let's succumb ourselves to whatever central bank wants us to do. And then at the end of the day, the Naira should be stronger, it should be stabilized, and everybody, all customers, will find a lot of things easy. Because I also have an account with some of those fintechs, and I'm happy to use it, especially for small trades. Among these invisible trades people, I know many of them are not that literate. So with those fintech accounts coming on board, a lot of people are now in the banking system, and you can use your POS anywhere. So it is give and take. It's a good idea for us to have them, but at the same time, we cannot stop the central bank in its effort to stabilize the Naira, from doing whatever it thinks it should be done as appropriate.
CBN has an ambitious target to increase overall financial inclusion to 95% of the adult population in 2024. With this new order, do you think that this target will be affected, especially when the company processes about 100 new accounts every day?
My dear, I think it's a good idea. Like I said it earlier, having the fintechs on board is part of the financial inclusion program. And I've also stated it. When you look at the statistics before now, a lot of money is outside the banking system. With these invisible trades people, if you go to the local market, people rather transact in cash. Do you understand what I'm saying? They don't want you to say you want to use one bank account or the other. But with these fintech institutions, they have enabled everybody to have confidence in open an account with the bank. They are also bank, but they are not bank in the real sense of the word. They are only for transactions and low-level, loans taking and cooperative movements at the end of the day. So what I'm saying is this: given the central bank policy to improve on its policy of financial inclusion, that is bringing more people to the banking system, I think the fintech people have really done a lot in that area, and I'm sure central bank wants to sanitize them to ensure at the end of the day that this policy is free of any rancor. It has no distractions. There will be no loopholes. There will be no leakages. And at the end of the day, a lot more people now embrace and imbibe the banking culture.
Now, apart from the usual know your customer checks, what other strict regulations that govern deposit money banks must apply to fintechs and microfinance banks in order to ensure the integrity of the financial institutions?
Normally, when central bank gives a license to an institution, it will go and check compliance with those rules and the regulations and the terms of reference. Now, like I said, if it is true that we're hearing rumors that some of them are being used, to destabilize the Naira through leakages, through money laundering and things, I think central bank would definitely want to look at review the licenses of the operations. And some may or may not fall along the line. Some may be strengthened, but all these ones are meant to ensure that the risks are less, customer services is safe, and there are no undue distractions, not like anything that can create panic in the industry, because these things needs to be put in check. And that is the role of central bank that sits at the apex of the nation's financial institution. So I think at the end of the day, they may review the licenses for their operations. And going forward, that would depend on what the banking exam team must have found, and also try to do some rearrangement here and there. But it's not to be a discouraging signal. People need not panic. Customers need not panic about any of these things. But at the end of the day, to make those fintechs stronger, because we need them. We need them to expand this financial inclusion policy. We need them to ease transactions and deals in our domestic currency. And we need them because when you look at the size of the Nigerian country, the population size, over 220 million people. So, and the banks, those domestic money banks, the DMBs, cannot cover everywhere and every part. So these ones offer smaller, cheaper, and less rancorous services. What I mean by that in quotes is that your KYC doesn't go beyond your mobile phone, and they can get all your details from there. Unlike if you want to open an account with the DMB, you have to fill a long form, look for guarantor this, guarantor that, who has an account previously. But all these ones have reduced all those administrative rigmarole and red tapeism. So we need them. So I know central bank will not discourage them, will not get them out of whatever. They wouldn't say they shouldn't operate. But at the end of the day, they will relicense them to revamp their operations so that all of us customers and the Nigerian in general, all of us will have more confidence. It will engender more confidence in the banking and the financial industry at the end of the day. That much I know.
A former Deputy Director / Head Banking Services Division at the CBN and Principal Consultant, Margo International Resources Limited, Margaret Ogundana. Thank you, ma'am, for sharing your insights. That's all on this episode of the program. We'll see you again next time. Bye for now.